What is the key interest or lending rate? It influences how cheap loans are, how much money is in circulation, and whether the economy grows or shrinks. The benchmark lending rate is the most important interest rate for the money markets. It's set by the central banks. In Europe, that's the ECB. In the US, it's the Fed. If the benchmark lending rate is low, banks can borrow money cheaply from the central bank and then lend it to businesses and private individuals. And more people are taking out loans to buy a car, build a house, invest in the stock market, or purchase other consumer goods. That leads to a growth in industry and creates jobs. But when there's lots of money in circulation, the risk of inflation grows. To keep inflation in check, the central bank needs to raise its benchmark lending rate. But that makes loans more expensive and slows down the economy. Heavily indebted countries can find themselves struggling to carry their huge interest burden. But in principle, at least, an independent central bank shouldn't really be swayed by such concerns. Its job is to keep prices stable. That's why it must either lower or raise its benchmark lending rate to regulate the financial markets.